Success is the sum of small efforts repeated day in and day out. Robert Collier. That is exactly what we ask you to do. Day in and day out, 10 to 15 minutes a day. That is all we ask. And my friends, when you master the market, when you figure out how to read charts, can you imagine what that day's going to feel like when you're able to practice trade successfully time and again? Oh, sure, you'll have things turn against you every now and then, but you minimize the loss in your practice trade and you maximize the gains. Won't that be a great day? All it takes is 10 to 15 minutes. Let's jump into these charts. We see stocks and gold up for the day, bonds down. The only thing that's surprising us is gold. We'll talk about that when we get to it. Bitcoin flat. We see real estate and oil down. Still taking candidates for our oil replacement. Not excited about USO. I've heard a number of things. USL is one. Anyway, give me some suggestions, guys. That would be great. Only started covering it because that's what you wanted. And OIL went out of business. Just the fund was called. So let's jump into these charts. What do we see happening on the S&P 500? Up for the day, 0.46%. We can see a green up candle. Now, what we're really seeing is a sideways slide here, aren't we? Price is right there at the weekly trend line. It's below the 2-day. Price percent oscillator nonetheless pushed through the 200-period moving average line, still going up. Derivative oscillator peaked back at the beginning of June and has been going down since then. Go to the 2-day chart. Look at it. Getting very close to a crossover going down or potentially a bounce off. Not if the derivative oscillator has anything to say. It continues to gain downward momentum. This is just the first day of the latest 2-day candle. We'll wait and see what Wednesday is like and what it is telling us. It is interesting. You can see those two big down candles representing 4 days. That is Thursday and Friday, the 11th and 12th of June, and Monday and Tuesday, the 15th and 16th of June. So we'll continue to watch and see what there is to see as things continue to progress. Really a sideways slide, but that devolution, we'll see how it continues to move. What's up on the 4-hour chart? Hardly enough energy to cross over going up. It's hard to tell, pretty laminated there. Up in the morning, bit of a pullback in the afternoon, like we said, up 0.46%. So we'll continue to keep an eye on the S&P and see what it actually does. In particular, paying attention to that 2-day chart. Some inherent weakness there. Not so with the NASDAQ 100, the tech stocks. Look, prices above the weekly trend line, above the 2-day trend line, going up quite nicely on the price percent oscillator, derivative oscillator, still quite positive, losing some momentum. Go to the 2-day chart. We can see where we're going into 5 days of strong up movement after 2 spinning tops. That same time period we saw the S&P trundling down so hard. And of course, lots of energy there. Now we do see that the price percent oscillator is just moving parallel to the red signal line. Somebody asked me, and again, it is interesting, the folks that join us, I guess they had never paid attention to what the red signal line was. Folks, everything on our charts are explained above, and they're color-coded. They want to know, what's the red signal line? Well, it's the exponential moving average 8. So on something like the 2-day chart, that would be the 16-day exponential moving average. That's what it is, and we use it as a signal line to show us weekly vertical crossovers or 2-day crossovers. Now on this chart, it would be 16 days. So we look at the derivative oscillator losing momentum, getting quite weak. So again, we'll continue to watch and see, but a good day for the NASDAQ 100. Up in the morning, a little bit more up in the afternoon, and the price percent oscillator about flat. Derivative oscillator gaining some upward momentum. So again, continue to watch, see how much further this will go. Again, Q's up 0.85% for the day. That was good to see. I mean, look how long this 2-day chart has been continuing to move up, just refusing to cross over, going down. Q's is getting closer. So, I'm sorry, the S&P is getting closer to crossing over. So, we will continue to watch. Now we leave and we go to 20-year bonds. Leave stocks for bonds. What do we see here? Well, we had that weekly vertical crossover. 2 good weeks of that. Now we have seen things sliding sideways and upward. So far this week, a slowdown in the up movement. A red open box candle is pushed through the weekly and the 2-day trend lines. Derivative oscillator losing downward momentum. Price percent oscillator still heading down. About the same angle as it has for the last 3 weeks. So we'll continue to watch, see how that shapes up. Look, don't have enough energy to see the 2-day chart crossover going up. So it's sort of stalled right there on the 2-day trend line. We'll continue to watch and see how that, and also almost have laminated the weekly. Are things going to roll back over? Well, if you look at the 4-hour chart, you can see where it had crossed over going up back on the 9th of June, moved up for a while, then came down and bounced off the red signal line. Is it going to bounce off again, or is it going to cross over going down? Pay attention to that. Might give you a feel for a potential continued down move in bonds, if indeed that occurs. Have so much occurring around all these trend lines. Let's see how bonds shake out. Should see something as we continue to move along during the week. What about gold? Up for the day, 0.85%. Now remember how gold was bound right there around the 158 to 164 mark? Well, it is now 166.48, has popped up to new highs. Check it out as it goes. So we see that the price percent oscillator crossed over, slid along, and appears to be trying to cross back over, going up. It may be our first failed weekly vertical crossover for the year. We have had, was it 11 so far that were super successful? This one may not be, but we may have a bounce off, what we call a weekly vertical crossover going up. We'll wait and we'll see how this week shakes out. But a big green up candle. But look how much up movement it took to counter this down energy. It's very interesting when you see that happen as things slid sideways. And even with all the up moves so far, 3 days in to this latest candle, look at how little it's affected the price percent oscillator. Derivative oscillator still negative too. So we'll continue to watch. 2-day chart, that will end tomorrow. Will it end with a crossing over going up or a bounce off? We'll just have to wait and see. There is a lot of energy pushing it up, it appears, but we'll see how things continue to progress there. And of course, that 4-hour chart, it crossed over going up back on the morning of the 19th. And I say 4-hour, it's the half-day chart, 195-minute chart. I know the engineers are excited and happy that we now have the proper minutes to reflect how much the market is open. And of course, it doesn't make much of an impact on our decision-making process, but it keeps the engineers happy. I'm sorry, I love you guys. My son's an engineer. And I love how dedicated y'all are to reality. And that is never a bad thing. We see the price percent oscillator heading up, derivative oscillator gaining upward momentum. Gold is just shooting up there. We'll see how long that energy continues to move it forward. Folks, that's where we are as we end the day with our 4 big charts. I got 3 more charts to go through, really 2, because Bitcoin's done nothing today. Don't really have much to cover there, but thank you everyone for the accelerated market mastery interest. We are still making phone calls and qualifying students. If you haven't heard back from us as far as after we've done our initial interview, I will be getting back with all those people and tell everyone who is accepted or not. Accelerated Market Mastery is a 3-month training course for folks who are seriously interested in trying to take what typically is a 5 to 10 year time period and reducing it down as much as possible to push that practice training to all new highs. That's what we want to do for you. And again, it includes charting, it includes options, and creating your own virtual personal wealth fund so that you can practice trade that. It's like having your own little mini hedge fund that you sit there and learn how to put together and how to manage. And again, we're going to practice all those things. Can't wait to get it going. Going to start in mid-July. So if you are interested, we need to hear from you. If you look in the show notes, there is a good video about the Accelerated Market Mastery course. My telephone call, which lasts between 20 and 30 minutes, usually around the 30-minute mark. I interview the students, find out what they're interested in, and help them make a decision as to whether or not the course is right for them. But before I talk to you, it's very important that you watch the video that's attached in the show notes. But just reach out to me. If you don't have the video, we'll make sure you get it, send it to you, set up a time to talk to you, and see if it's right for you. Okay, let's keep moving. We see that Bitcoin just moving sideways, not doing anything today. I don't follow Bitcoin. The only reason I track it is because you guys asked me to. We can see where Bitcoin is on the 2-day chart. That's heading down. We're waiting for a 2-day recross. And again, because the weekly is up and flat, 2-day is down. So one of two things is going to happen. The 2-day is either going to cross back over going up into what we call a recross, or that weekly chart is going to be pulled over into a down move by the 2-day that's already preceded it. We'll see how that continues to move. We'll track that with you, figure out what's happening. Now, let's go to real estate. Down for the day, 0.41%. What do we see happening there? We had a weekly vertical crossover back on the 29th. This is the Vanguard Real Estate Investment Trust Exchange Traded Fund. We had 2 weeks of good, strong up movement, and now things just sort of are dying on the vine. Derivative oscillator losing momentum. Price percent oscillator still heading up, but price movement sure is suffering. Look at that 2-day chart. 3 days of down movement. We are waiting to see if we're going to have a crossover going down on that 2-day chart and just how bad that is going to be. Or maybe it'll bounce off. Real estate will gain some energy. Don't know where that's going to come from, but I don't know where a lot of energy comes from in these markets these days. On the 4-hour chart, we see things just sort of sliding around a new bottom somewhere around that 79.60 something mark. So we'll continue to watch, see how real estate sorts out. USO, it is trying to cross over going up. Is that going to happen by the end of the week? Can't really tell. Looks like it might be. But again, down for the day about 1%. Let's see, 0.90. We do have a little green candle forming. So we'll continue to watch and see how that proceeds. 2-day chart continues to move up. Price percent oscillators pushing through that 200 period moving average line. And we have a green candle forming. And what we see is up movement in the morning, pairing back in the afternoon on that 4-hour chart. It's positive. The derivative oscillator devolving a little bit, and the price percent oscillator heading down a little. That's where we are, folks. We'll continue to chart these markets for you every single day. 10 to 15 minutes, that's all we ask. You don't have our book. Second edition's available at the printers, being delivered on Thursday, and all the orders are going out. Your own signed edition of our very, very popular Charting Your Way to Wealth. You want to know what we do here? That's what you need. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.